Morning, Steve Free in Chicago with the morning grain comments. Well, we have a little bit of pluses on overnight grain prices up just marginally. I think in general, the market is talking about a couple of things. Number one, maybe the grains are oversold, and we really don't have any new news to push it any lower. Funds continue to be short corn, whittling down their long position in beans and adding to their long position in soybean oil. We did read a couple of analysts talking about how because of the supply declining a little bit in South America of corn and beans and also maybe wheat in the Black Sea, our export prices are now competitive and we might pick up a little bit of export demand. So some feel that yesterday's lows in corn, beans, and wheat might hold. We also have a lot of data that's coming out, and yesterday the USDA said that the winter wheat crop rating was 52% good to excellent versus 54 last week and 56 a year ago. The drops were in the hard wheat plains area, Kansas, Texas, Oklahoma, and Kansas. And for some people in Kansas, they have not seen a rain since September. Again, they don't really need a rain right now, but the stands might be improving if they were to get a rain. We also noted that corn harvest is 76% done. Normally, it's 92% done. The states that are furthest behind is North Dakota, Michigan, Wisconsin, and South Dakota. And some people think, especially in North Dakota, this crop harvest of corn may be delayed all the way into January. So the question is, will that matter as far as production is concerned, as far as the carryouts are concerned, and if that has any impact on prices? Weekly wheat exports are running 21% ahead of a year ago. USDA is calling for a 2% increase. Corn is 58% behind. USDA is calling for an 8% drop. And soybeans are 12% ahead, and USDA is suggesting a 2% increase. Still no new news as far as the U.S. and China trade deal. Again, that offers resistance to the marketplace, and we'll see if we see anything soon about the possibility of coming to an agreement on phase one. The good news is the market's grains and equities might respond positively to that. The bad news is phase one deal is no different than what we had before. So we'll just kind of see if the president wants to give up some tariffs in order just to sign the phase one deal. As far as weather is concerned, U.S. Midwest 6 to 10 day calls for a bit below average precip and temps. We do see a couple of systems coming across the Midwest in the next few days, so we'll kind of see if that slows things down as far as the final harvest is concerned. South America, forecast for Brazil 6 to 10 days, still rain in most areas. Argentina also could see rain in most areas, which offers a negative input to prices. We did see an extensive report out about a visit last week in Brazil between Russia, India, China, and South Africa. And the talk was that there's going to be increased trade between those countries concerning Brazil. So Brazil exports 40% of their ags products to China. China announced they're offering $100 billion to Brazil for infrastructure and $1 billion to a port improvement in northeast Brazil. Russia would ship fertilizer to Brazil, and food would go to India. Some private crop people are lowering slightly the Brazil soybean and Argentina soybean crops, but keeping their corn crops unchanged. So again, funds yesterday, basically buyers of wheat, they sold corn, they sold beans, they sold meal, and they bought a little oil. We estimate that the funds right now are short about 6,000 wheat, almost 150 corn, and long about 26,000 beans. So we'll see if the fact that we are competitive in the export market now for corn, beans, and wheat will offer support to a market that might be a little oversold. As always, these are my thoughts, not those of ADM or ADM Investor Services. Have a safe and profitable trading day.